Welcome to This Organized Life. If you're a mom, wife, or coffee lover seeking advice on how to reduce clutter and reclaim time, look no further than your host, Lori Palau, founder of Simply Be Organized and author of Hot Mess, a practical guide to getting organized. For a lot of people, clutter is their dirty little secret, but it doesn't have to be. Each week, we will share practical tips, chat with experts, and provide strategies on how to keep you organized. I hope that by sharing our stories, you feel a little less alone and more empowered to tackle the areas that are holding you back. So let's get started.
Hi, everybody, and welcome to today's episode of This Organized Life podcast. I'm your host, Lori Palau. So happy that you're here. We've got a great episode for you today, all about tax prep. But before we dive into it, I just want to go over a couple of housekeeping things that we've got going on over here. So we have, and if you may already know, but if you're new to our show, we have recently in this year kicked off our free listening option. So we want to make sure that our content is accessible to everybody. That's why we started the show. That's what we're about. We just want to reach as many people as possible. We also know that sometimes interruptions through ads and sponsorships can get distracting, and I totally get it. So we now offer an ad-free listening option. You can do it all through Apple subscription, right on your podcast app, if you so choose. And what that does is it just eliminates the interruptions throughout the episode. You'll still be in the know of any happenings here, because I'll make sure if there's something that's really relevant to you that we have going on, like a webinar or workshop or something, we'll make sure that you know about that. But some of the other just more, commercial type air quote ads you won't hear. So totally your option, whichever way you want to go. I just want to let people know that that is now available to enhance your listening experience if you want. And we are grateful for all of our sponsors, though. So I do want to give them a shout out. The other thing is, a lot of people have been asking, about our organizers. Where can we find trusted organizers? We have a network of professional organizers. They're called our SBO Partner Program. We vet them, endorse them, we mentor them. They all own and operate their own independent companies. They're all over the country in different markets. So if you are somebody that is either looking for a professional organizer, you can go to our website, simplybeorganized.com, and you can find an organizer. You can search for an organizer in your area. Or if you are a professional organizer and you're looking to learn more about our program, you can visit us on the Work With Me tab, and it'll take you all about our business mentoring and kind of all the different things. So whichever side of the fence you're on, we would love to be able to support you wherever you are. All right, I think that's it for now. I'm excited for our guest today. So joining me is a CPA, not just any CPA, but a top-rated CPA in the state of Pennsylvania, Samantha Besnoff. And she's been in the accounting world for over 25 years. She was recently named one of the Pennsylvania Institute of CPAs Women to Watch. So again, knows her stuff. And her business specifically focuses in on individuals and small businesses for all of their tax and accounting needs. And obviously, some of the stuff is federal, some of the stuff is state specific. But as a small business owner, I know that there are a lot of nuances that are important to know in the tax world, and it can become overwhelming. And hopefully people have a CPA that they know and they trust. But if you don't, or you're just not sure what questions to ask, Samantha is going to be the one to kind of help answer some questions or point you in the direction. So I invited her on the show today to talk about some tax stuff and just how to get organized when it comes to your tax documents. So let me welcome Samantha Besnoff to the show. Welcome,
Thank
Samantha.
you, Lori. Thank you. I'm so excited to be here.
Yes, yes. Another Pennsylvania person in the house.
Absolutely. Woohoo!
Yes, exactly. So tell our listeners a little bit about you. I gave them kind of real top line overview, but just tell them a little bit
Sure.
about you.
Sure. Thank you. So, as you mentioned, I am a CPA, certified public accountant. I'm also actually an independent life insurance agent going along with that and a podcast host. I have my own podcast, Your Financial Maven.
I'm sorry, I totally forgot about.
Oh,
I was so
no,
excited
that's
about the tax
okay.
stuff. I didn't even mention that. Yeah, she's also a podcast.
Absolutely. Not at all. Not at all. And as you mentioned, I do own my own small business, same name, Your Financial Maven. And I provide a holistic approach to financial well-being in tax, accounting, business acumen, life insurance needs. I work with small businesses. I also work with nonprofits. I do a few nonprofits and I do work with individuals. I've been married for about 26 years. Very excited at that. Mom
Are
to
you
two.
though? Are you? Are you?
Yeah, my husband and I have known each other for a lot longer than that. I think 32, 33 years. But yes, we're empty nesting right now. Both of our boys are in college. So yes, I have two sons in college. We have a little fur baby, Sasha, little dog. She's adorable. And I love spending time at the beach. The beach is like my go-to place, and especially sunrises and sunsets at the beach. So yeah, a little bit about me. Like you said, I grew up in the suburbs of Philadelphia, but I've been living in Lancaster, Pennsylvania now for about 30 years almost. So definitely, love being a Pennsylvanian. So,
Yes. And
although
for those of you, you're. How far are you from Hershey? Because that's
35 minutes.
yeah. So Hershey Park, and because when people ask me they're from Pennsylvania, do you live? Are there Amish people, or do you live near
Yeah.
Hershey Park? Like
Yeah.
those are the questions that I get. And I'm always like, no, I'm on the other side of the
Right.
state.
You're in the city side, like that, then yes.
Yeah.
Yes, we do have Amish everywhere. When you learn to drive in this area, you've got to be careful. So when we taught our boys how to drive, yeah, you got to be careful. And Hershey's 35 minutes away. I actually audited for the state of Pennsylvania about 20 some years ago. And one of the school districts was Hershey's school district, and it smells like chocolate 24/7. So I
Stop
love that.
it. Oh my
Yeah.
gosh. Oh my
Dauphin
gosh.
County's awesome right there in Hershey. Like,
Seriously.
yeah, it's kind of neat.
All right. Well, I'm going to dive right into it because
Okay, great.
and this is, listen, and we were saying before we hit record, like there's a lot of information here. So buckle
Yes.
up, people. We're also going to, if we can't cover everything in this
No.
episode, we're going to link to all things Samantha. And I know you've got tons of free
Absolutely.
sources because there is like, this stuff is really important. And when we talk about, especially in the organizing space of what we get rid of and what not to, you want to be
Yes.
really intentional. Like always put a disclaimer out whenever I'm working with a client. Like I will give you what my thoughts are on certain things, but I always
Absolutely.
default to check with your CPA because there are certain things that you
Yes.
want to hold on to. So I'm going to come right out of the gate, swinging for the fences. How long do we really need to keep old financial documents?
Okay, so here's the thing. The IRS says 3 years of records, tax records, anything that goes with your tax returns. They do say, though, you should keep it up to 7 years if there's anything with regards to securities, stock, debt. I actually tell my clients 7 years because you just never know. You may end up needing that. And that's your tax return. Anything to support the numbers on the tax return, your W-2, any other tax forms you get. You make charitable contributions. You can keep the letters, that kind of stuff. And the beauty now that things are electronic and digital, you can scan it all up and save it out into the cloud, OneDrive, Google Drive. You don't have to keep the physical paper. So it's okay to keep that. But the things that you should keep kind of in perpetuity are you buy a house, you want to keep the original information on buying the house, any documents that show how you made improvements to the house, so that if you sell that house you have that because you have to report it on your return. Most likely any gain on the sale of your house will have some exemption to it, but you still have to have those documents, and also anything related to stocks or mutual funds. A lot of investment, companies, they don't always know your cost basis, when you bought it and how much you bought that stock for. So you want to keep that information because when you sell it, you need to be able to know how much you made between when you bought it and when you sold it.
That would that not be available like through like online?
It should be. Yes, it should be
Okay.
available in your account. But, if you've held stock for 20 years, it may not have the original, like all the way back 20 years. But,
Okay.
just to make a note somewhere
Yep.
that, you can do a little
Okay.
Excel spreadsheet, make a written note. But you don't need to keep the statements per se for 7 years. You can keep, your stock statements, your utility bills, paychecks, the last month. right? Your paycheck will have the whole year in December. When you get paid at the end of the month of December, that'll show your whole year's worth of what you got paid. Same thing with the investment broker statements. You don't need to keep 7 years worth of investment statements,
Well, do you
but
advise
just,
people, like, I would advise a client, but again, I would advise
yeah,
the client to just go paperless. Like,
absolutely.
why even take the physical clutter if you want to look at those statements?
Absolutely, but you
Just
have to
scan it. Yes.
remember, yes, but you have to remember a lot of times credit cards, investment brokers, they don't keep years and years of worth of documents on their site. So when they have their statements, you can download them into a file on the cloud, right? You can
Right.
keep an electronic copy, but if you, let's say in 5 years, you wanna get your original statement, they may not have it, right? So
Right.
you have to be careful about that too.
Do you find that a lot of people need to go back to their original statement?
If they have a sale of a stock, let's say, and their
Okay.
brokerage statement that they get, like they get a 1099-B if they
Yeah.
sell a stock or you have dividends, things like that. And if it doesn't list the cost basis, they're going to have to go back and a lot of times people don't remember what they bought their stock for, and
Yeah.
when they bought it. It could be very long term, it could be short term. But I agree with you. Definitely do electronic as much as possible. Your credit card statements, I know for several like credit card companies, they will do a year-end summary.
Mhm.
Just save the summary. That
Yeah.
gives you the entire year, then you don't have to save every month, um, for statements.
Yeah, because I mean, we talk a lot about the different types of clutter, obviously
Yes.
physical being the driver, but also the emotional clutter. And people don't
Yes.
think about it, but I have, like, when you at first glance, you'd be like, paper's not emotional, but there's a lot of
It is.
fear. There's a
Yes.
lot of fear that I find with clients about wanting to get rid of things. They feel they need to hold on to things
Yes.
out of fear, which is a form of emotional clutter. It's not
Mhm.
sentimental. It's not like,
Right.
oh, the sentimental part of it that you would think of with emotional clutter, but it is this, do I need it? Do I not need it? And that's why
Right.
people a lot of times, well, when they're not sure what to do with it, they do nothing. It's
Right.
indecision. And I'm just
Right.
going to put it over here. And paper has this sneaky way of
Yes.
becoming like a gremlin and just
Oh, yeah.
overwhelm yourself. So,
Yeah. I
anytime,
mean, I hate to admit it, I
yeah,
have a filing cabinet in our garage that has papers in there, and my husband and I talk about we need to start going through it, we need to declutter, and we do try. We try once a year to kinda do that, but, life gets busy but now
and
that the
you're
kids are out
intense.
of the house, I think we have more time to, declutter.
Yeah.
Yeah.
So I want to pivot a little bit
Okay.
and talk about um what it's like when tax season's, coming up. And obviously with businesses, tax
Yep.
season can be at any time, but let's just focus for argument's sake for now, for the ease, about April 15th.
Absolutely.
I'm a big proponent of, like, just even creating a file as
Yep.
your statements are coming in, your 1099s are coming in, all of
Yep.
your stuff, just as it comes in, even if you're not doing anything with them at the
Right.
time, just corralling them so everything is in
Mhm.
one central spot. That's like my kind of
A
baseline tip.
Absolutely, and actually, like you said, you'll find a lot of tax forms now are electronic. A lot of companies, you work for a company, your W-2 is going to come to you electronically. Your 1099 dividend statement, it's probably going to come electronically. So you have to keep that in mind that a lot of them, but you can still create a folder somewhere on your laptop, in the cloud or in your desktop to organize them all in one spot. So for my clients, I have a tax portal, I have a client portal, and I
Mhm.
try to tell them when your documents come in, upload it to the portal immediately. So if you work with a CPA, an enrolled agent, someone that's preparing your taxes and they have a portal, just upload your documents immediately to the portal because they're there. Um, so
Great
yes,
tip. Yeah.
yeah, definitely, and that's something that I find that people forget and I've done it going, "Oh, I forgot I have to go check this bank statement," because 'cause we're used to, growing up getting paper in the mail, right? Getting statements in the mail. And a lot of things are electronic, so you really have to check all of the bank statements or bank accounts you may have if you have investments. Most of the forms need to be out by January 31st.
Well,
So, yeah.
exactly, and we're recording this prior to that, but by the
Yes.
time this releases, it's going to be probably like middle to end of February. So if
Yes.
you are somebody who either is responsible for having contractors, hopefully you've gotten all of your 1099s out. And if
Yep.
you are somebody who is a subcontractor, and again, we have a lot of listeners specifically, excuse me, in the professional organizing business, and a lot of our organizers subcontract for other organizers.
Right.
So just know if you've done any work for anybody in that previous calendar year, you should receive, if you made over $600, right? I want to make
Correct.
sure that number
600. Yeah,
hasn't
no,
changed.
it hasn't changed. It's $600. You should be receiving what's called a 1099 NEC, which is a non-employee compensation form. It's a little bit newer. There is a 1099 miscellaneous. That's really for rents, royalties, some other types, but as a contractor, you should be receiving a 1099 NEC for any payments over $600. And small business owners, your organizers, anytime you hire a subcontractor, you hire a vendor, you should be receiving from them what's called a W-9. And that clarifies to you whether or not you have to issue these tax forms. But yes, those tax forms have to be sent out by the end of this month. And I'll be honest with you, if you don't, there are penalties. There are some significant penalties for not sending the forms out to your vendors or your contractors, anybody that's not an employee. And you technically should be withholding 25% of tax if you don't send those out. So it's better to send them out, and then you won't get in trouble.
Yeah,
And
absolutely.
the other thing I tell a lot of people who are sole proprietors or, in the service business is your responsibility is to send those forms out. It is not your responsibility of whether or not the person on the other side reports it. And you will get some pushback from some people, and I've had pushback, and I just say, you have to do what you need to do to protect yourself and your business, and you're obligated to send these forms out.
Right. So my obligation ends with me making sure that it is received, and I have like a record that it was
Absolutely.
received, and that's it. So,
Absolutely. Yes.
so if for some reason my subcontractor decides that doesn't
That's up to them.
impact me, that's okay.
Right. You've done your job, because that's the other thing everyone needs to understand is when you get your W-2 or you get a 1099, all of those forms, they also get sent to the IRS and the Social Security Administration for payroll, the payroll stuff. And the IRS will match it. So you could get your W-2 and shove it in a drawer and never file your taxes. The IRS has it. So you have to remember, it's not just coming to you.
Right. Exactly. You hiding it. It's
Yeah.
out there, people. It's public.
Correct.
You don't
And
want
also
to
for
mess
this,
with the IRS.
right. And also your state is getting a copy. And I know in the state of Pennsylvania, we have to file local taxes. So the local taxing authorities are getting that as well. So you can't really hide. You might not get a notice right away. It might take them a year or two, but I will tell you, they are getting that information.
I appreciate that. And I know there's
Absolutely.
probably people out there that are like panicking because it's like, this
Yeah.
is the serious stuff. But if you
Right.
are unsure, and especially if you have a lot of moving pieces, people, and this is like just my pure editorial perspective, I think this is one area I don't mess around. Like
Yeah,
I
don't mess around.
I have a good CPA, I have a good, bookkeeper. I am at I have a fractional CFO, like, so
Yeah.
there are key people, but even if you're just starting out, make sure if you're not, because you don't know what you don't know, and you don't want
Correct.
to inadvertently do something that is,
And it's okay. I should say this sounds serious, but I have to tell you, the IRS isn't out to get you. Okay. There are people who have made mistakes on returns, have accidentally not filed for whatever reason, and you'll get a notice. And 9 times out of 10, it's a matter of just responding to that notice, being honest, going, oh my goodness, I forgot this, fixing that. It's really, they're looking for the people that are being intentional about not filing their taxes.
Right.
They really, and again, you have your documentation to support why you claimed certain things or reported certain things. 9 times out of 10, they're not going to be coming with a, orange jumpsuit and haul you off to jail. So
Exactly.
you have to remember
Thank
that
you.
too.
And thank you for
Yeah.
saying that, because I'm sure there's some people right now that are on the
Yes.
ledge. And so thanks for talking.
Yeah, please don't go on the ledge.
Exactly.
You're good.
Okay. So I'm wondering, talking about that again, there are, I'm sure, some things that do slip through the cracks.
Yes.
What are some of the common kind of missing pieces that you have to see with your clients, like when you're doing tax prep with them? Like, what
Yeah.
are
So So I try hopefully not to have missing pieces. I do have a tax organizer that goes out to my clients. They fill out the questions, they upload their documents, but sometimes I find they forget to report all the information for their dependents. You know, when you're claiming dependents, you need their name, social security number, their date of birth, and also, and people get confused when you have someone in college, you have a dependent in college, you're still claiming them. They technically still live with you for 12 months. It's a test of, are you providing 50% or more support for that dependent? So I get clients who are like, well, they only live 4 months here and 8 months in college. I'm like, well, no, they live with you. You're still supporting them. But the thing you also have to remember is your name on your return, whether it's you as a taxpayer or the dependent, has to match what's on your social security card. So there have been times my clients will fill out the organizer and the name might be a nickname or not the full name. And I always ask, you know, where I have to go back if it comes back rejected because they try to match the social security number with the taxpayer, what's on your social security card. So you have to remember, you know, it's got to match exactly what's on your social security card. That's a red flag for the IRS.
Really?
Yep.
So like my social security card has like my middle name, my maiden name, my married name, all those names.
So for your middle name, you can do the initials, but
Okay.
you know, if your card technically has your last name as your maiden and married name, you technically should be putting down both. Most likely it won't get flagged for that because your last name is still on there, but it's
Right.
really the
Okay.
first and the last name have to match.
Oh, okay. Because I'm like,
social-
I'm
yeah.
all of a sudden having panic because I'm
Oh
like,
yeah, no,
okay, wait a
don't
second.
panic.
My social security card says Lori Hope Gable Palau, and I'm
Yeah.
pretty sure that I just signed my tax returns Lori Palau.
And I think it's fine that way because you're
Okay.
on your return, it's probably just Lori Palau, but that's the thing. The first and the last name
Okay.
have to match because and also when like clients who are having W-2, you know, if they hire somebody to do payroll or you're sending out to your contractors on the 1099s, even if you have a misspelling, sometimes that gets flagged.
Sure.
So you just have to be careful with that. And some of the other things that I don't always get from clients are when they sell stock and the information about when they sold it, how much did they buy their stock for? Oh, it's on the statement my broker sent you. And I have to go back and say, no, it's not. Sometimes it is, sometimes it isn't. So, you know, not major things that my clients miss. I think a few of them don't, you know, if they're partners or shareholders in a business, a lot of times those tax forms, the K1s, they don't come until March because those business returns aren't due till March 15th.
Right.
So I have a few people that have gone into newer businesses that are partnerships or S corps, and they may forget to tell me that. So but the tax organizer that I send out is very thorough.
Right. So it prompts you, right? It almost, it prompts you to remember all of those things. Can I just go back real quick and ask you a question from the dependents on the dependent thing?
Sure.
So when are your children no longer considered a dependent?
Okay. So so here's the deal. Between 19 and 24 years of age, if they are still being provided 50% or more of support and they are in school, they technically could be still a dependent.
Okay.
And you can have other dependents besides children. So there's these dependency tests. One of the big things is support. How much are you supporting them? Is it 50% or more?
So
and
you're
how much
taking care of an aging parent, per se.
Correct. You could potentially claim them as long as also there's some income limits for that. But I will tell you, for the ages between 19 and 24, the benefit of having them as a dependent does decrease. Partly because of the age, partly because your adjusted gross income when you're filing your return could be higher than the limits. So you just need to know that as they get older and all, you know, like my son just turned 22 and he graduates in May. And so for this year, you know, he's technically still going to be supported by us for about 6 to 7 months. And if he doesn't get a job and comes home, we're still going to help, you know, support him. So we technically could take him, but maybe not. It all depends on if he then gets a job and he starts making a lot of income, he's filing on his own. I'm not going to claim him.
Right.
So,
I know I have one. That's what I was asking. Like I have one that like fully launched and has like a big girl job and everything.
Yeah. They're fully launched and big girl. And if they're 22 and 23, you probably cannot take them. So the 19 to 24 age is kind of where that becomes, well, what are the questions? And that's where a professional CPA and enrolled agent can help you determine that.
I appreciate it.
Of course.
Okay. So just next one is more about any do's and don'ts. Like, and I know you've given a lot, but I think people like lists. People
Oh,
like,
yeah.
people like
Oh,
checklists.
yeah.
They like to know, tell me what to do, tell me what not to do, and I'll
Right.
follow the rules.
Well, I think the biggest do, as we mentioned before, is being organized with all your paperwork before
Yep.
you sit down. Now, if you're preparing your return by yourself, one of the things you also should do is look at your prior year return that you filed and see, make sure you have all the documents pretty similar to last year. You might have some new ones or you might not have all those same ones, but look at your return from the prior year to give yourself an idea of where you think you might be for this year. And as you're filling out this year's return, it's kind of a way to say, am I getting all the right information? And you're working with a professional. If you've been working for them for, more than a year or two, they'll have all that stuff as well. So there's that. The other thing I highly recommend is on the IRS's website, irs.gov. They have a spot where you can actually sign up for an account, and it's your account on the IRS where you can log in, you can see prior year's return transcripts, you can see any estimated tax payments you may have made. They'll have the credits in there still from like the COVID years, and if they do any other credits, they might show that. Any notices could potentially go there. And the other thing that they allow you to do is getting an identity PIN. It used to be the identity theft PIN. So if you had your identity stolen, you needed this PIN to verify when you file online. Since COVID, the IRS has expanded it to just being an identity PIN. And if you're e-filing, I highly recommend you apply to get this identity PIN. You have
Really?
to do it
Okay.
yes, you have to do it every year because it changes every year. It's not a big process. It allows the IRS, when you're filing your return, to know that that PIN is tied to your social security number. So they know it's you when you're filing it. And I've had clients over the years forget to give me their PIN, and the returns have been rejected because of that. So that's also, make sure you give it to your paid professional. The
But you have
thing
to do it
about
every year. I'm sorry. I
You
didn't
have
mean
to
to
do it
interrupt
every
you.
year, but it's really simple. You log
Okay.
into your account. The system, I think, is up and running as of January 16th. You log in, you say, I want my identity PIN. There's like a button. You click on it. It literally takes 5 minutes. The thing about the IRS account, though, is if you file a joint return,
Mhm.
the IRS considers you each an individual taxpayer. So each of you have to have your own account because it's tied to your social security number. So
So Josh and I would give our CPA both of our pins.
correct. Correct. And I do highly recommend it. I've had some identity theft to myself over the last couple of years. And so having this PIN, because the issue is if somebody steals your information and files a return on your behalf or a false return, it's a lot of hoops to jump through. So getting an identity PIN is another way to protect yourself from a federal, when you're filing electronically. The initial setup of getting your account is a little bit, you have to take a little time. They have to verify who you are. When you're filing jointly, each of you have to sign in under your own email, own phone number, and your social security numbers. But everyone needs to understand that. And I talk to my joint filing clients all the time. You're
Yeah.
still individual taxpayers.
Right. Okay.
So the IRS, okay, you file jointly, but you're still an individual taxpayer. So definitely do that. A couple of the don'ts, and we already mentioned this. Don't freak out if you get an IRS notice. I know it can be scary. Oh my goodness, the IRS says I owe this. Sometimes it's a mistake on the IRS's side. Some data got inputted wrong. You might not owe this much. Sometimes the notices are in your favor. Maybe you misclassified something on the return and they look through and they fixed it and you get money back. So you have to read the notice. If you are having someone who is helping you, a professional, send them the notice. They'll review it. They have a little bit more expertise in how to handle that. But definitely breathe when you get a tax notice, even if you get it from your state. Take the time to read it. Take the time to reach out. And like I said before, if it's an honest mistake, they're not going to put you in jail right away. The
Right.
other
I think we
thing,
all if you see it, because I
yes,
know I've gotten them, I'm like, oh crap, what did
yeah.
I do or what did I not do?
Yeah.
And
Well, and also too, if you change your address and there's a form to send to them, a lot of times they'll send you the notice that they got the form for change of address. So you also have to remember some of those notices are really just clarification or whatever. The other thing I try to remind not just my clients because they're with me, but others that are looking for CPAs or enrolled agents is you have to be careful of who you hire to prepare your return. There are return preparers out there called ghost preparers. as a professional preparer, I have to have a special professional tax ID number, and I have to register that with the IRS. So that's one thing, and it has to be put on the tax returns. The other thing is I have to sign off on the returns. And if you hire somebody that refuses to sign the return, that is a huge red flag.
For
Um,
sure.
Yes.
Oh my
Yeah.
gosh.
Huge red flag. And, it's one of those things where if it's too good to be true, because the problem with ghost tax preparers is they're going to say to you, you're going to get this large refund and we're going to do this and that. And they're not technically filing the return. I always provide my clients an engagement letter that lays out what I'm going to be doing for them, what returns I'm going to be preparing, what information I need from them, the liability information. At the end of the day, the taxpayer is responsible for their return, not the person that prepares it. The taxpayer is responsible. And I have my clients sign off on that, and I sign off on that. So that's, and a tax organizer as well. So if you find a preparer that doesn't have an engagement letter, doesn't do an organizer, wants cash up front, like immediately, and it's a lot of money up front, and won't sign the return, those are red flags.
Big red flags, people.
Big red flags.
Yes.
And don't get me wrong, a lot of professionals and CPAs do require money up front to prepare returns. But again, if they have processes in place that are legitimate, and you can find who's legitimate. IRS has a great database to find a CPA, find an enrolled agent. Check with your state board licensing board to see if they're truly a CPA. I've come across people who say they're CPAs and their licenses have been expired for 10, 15 years. So,
wow.
Yeah.
Wow,
Yeah. One of them was running for our
crazy.
school board and kept saying he was a CPA, and I would cringe at the meetings because I knew he wasn't. So,
Wow. Oh my
yeah,
gosh.
he didn't get on the school board, but
Well, that's good.
Yeah.
Oh my gosh.
Yeah.
But that's crazy.
It is
Um,
crazy.
So this has been really great. I mean,
Thank
I know
you.
that as before we wrap up, are there any other things that I missed that you want to share with our listeners?
Yeah. I know it's more on the small business side than the individual side, but I think this is very, very important. There's some new requirements that just came out called beneficial ownership information reporting. Most small businesses are now required to file this. It's called BOI, Beneficial Ownership Information Form. It's actually through FinCEN, which is another part of the Department of Treasury. It's related to fraud, laundering money, foreign transactions. It's an easy form. I've already filled it out for myself. They just want to know your business, your address, the owner of the business and their address, and a valid ID. It's a new law that was passed. I have a lot of that information on my website. I've actually blogged, podcast about it. If you were formed prior to January 2024, you have all year to fill out this form. If you start a business this year, you have 90 days.
Oh, wow.
And I can give you the link, you can share that with your listeners. It's like I said, it's a very simple form. Some businesses may not need to file it, but it's definitely something to look at. I will tell you as a CPA, I will not be helping my clients file the form. The reason being is if you have a change in your business, so let's say you move, you have 30 days to update that form. Well, unless you let your CPA know or enrolled agent know, they're not going to know to update that form. So definitely talk to an attorney about this, a lawyer if you have. But it is a simple form. Like I said, it took me 10, 15 minutes to fill the whole thing out and then send it to them. When I did it, the online upload wasn't working. So I did their PDF form that they offer, and then you literally submit the PDF. It's something that was passed through a Transparency Act in 2021, and they're implementing it now. So
wow.
definitely look for BOI information.
Well, thank you. I'm going to do it. I'm going to let all of my organizers that are in my membership group know about that as well, because
definitely.
No,
And
I appreciate it.
You're welcome. And the other thing I also going back to individual taxes, the other thing as like a don't is try not to wait until like the last week of March to send your tax preparer your work. I'll be honest, any new clients I take on or any clients that don't get me their information until the end of March, they automatically go on an extension, because at that time I work 50, 60 returns at any given time. It's just too much. I am on the smaller side, but It's just too much. So try, if you can, at least get most of your documents to the preparer who's preparing it for you. Even if you don't have all of your documents, have them get the process started. Most likely you won't go on an extension. But if you call them up on March 31st, most likely they're going to say, yeah, I'll take your stuff, but I'm not going to work on it until after April 15th. And the thing about that is the extension is only for time. If you owe money, you still have to pay it by April 15th.
Oh, wow.
Yeah, so your extensions are only for time, not for payment.
So,
you have
but
to keep
how
that
would
in mind
they,
too.
so how would they know? So if they file for an extension and the return isn't done, would
Right, so,
they
like,
then,
it's an estimate, right? Your
okay,
preparer, like your tax professional will probably do a quick, rough type of estimate. Now, if you've been a client for years, your professional knows kind of where you've been. If you're a
right.
newer client and you're dilly-dallying and waiting, they'll take your information. They'll probably do a quick look at everything, do it quickly, and just potentially say you may owe this.
Yeah.
And there are times you might not know, and you just say to your client, "I'm not sure. We're going to file it. We're going to pay nothing, but you're going to have some penalties." And if you file for an extension of time, then they're due by October 15th. So you have
Got
about
it.
6 months.
Got it. But there's no reason people, I mean, unless you had some
Yeah.
extenuating circumstance that is unforeseen, obviously
Yep.
there's exceptions to every rule,
Yeah.
but if you're just procrastinating, like this is one thing.
Please don't.
And it's just like I tell people with, budgeting for Christmas or whatever, like this
Yeah.
comes around every year at the same time. Like we know
Absolutely.
this. So build that into your schedule.
Yeah.
Build that into your routine that you're going to take the time and have a strategy and a system
Yep.
so that you can have that not be
Absolutely.
something that you're waiting to the 11th hour.
Right, because so this year for 2024 tax season, which is filing of your 2023 returns, the IRS will open e-file on January 29th. So you can start filing your returns from the 29th of January till April 15th. I will tell you from my perspective, I don't start my individual clients till about the second week of February because I've got to get business clients done who are due March 15th.
Sure.
So you also have to keep that in mind that a lot of your preparers or professionals that you hire are not just working on your return, right? You have to remember they probably have upwards to 60, 70, 80 clients that they're trying to do. So yes,
Yeah.
please don't procrastinate. We would appreciate that.
Yes,
Yeah.
absolutely. Absolutely. This has been so amazing. So tell our
Thank you.
listeners, I know you've got a plethora of resources.
I do.
So where do people, if they want to learn more, get any of the information, where do they go?
Sure. I mean, you can visit my website at yourfinancialmaven.com. And I do have resources. I try to keep it as up to date as possible. Tax season gets a little hairy, but I do. I have a blog that you can find on the website, and I have my Your Financial Maven podcast. You can find that on Spreaker, Prime Network, or wherever you listen to your podcast. So there's some great information there. I also am on Facebook, Instagram, Threads now, and LinkedIn, all under Your Financial Maven. You can certainly go to your Department of Revenue for the state side of things, and also the IRS.gov website. There's a lot of great information on that website. So yeah,
I appreciate it. Well, we're going to
yeah,
link up to all things Samantha in our
definitely.
show notes and the irs.gov also for people. So
Yes.
I appreciate it. So, all right, before I let you go, always like to
Yes.
ask our guests a few wrap up questions more on the
Sure.
personal side of things, because
Okay.
I like to just kind of, know what's going on behind the curtain.
Yeah.
So I don't know. Are you a book reader? Do you like to read?
I'll be honest with you, I don't read as much as I should. I do a lot of Audible books,
That's okay. That
but
counts.
yes, that counts. But I do read, but I'm not like an every night, like, "Oh, I gotta pull a book out and read."
Oh,
I'm more of a
that,
TV watcher, but I do
that's
read.
fine. That's fine.
Yes. Yeah.
What's your this isn't one of our questions, but I'm just curious. So what's your TV? Like what's your guilty pleasure?
Oh, geez, sports. So anything
Okay.
Philly sports, except for ice hockey, I'm not 100%
Okay.
into, but I'm sad about my Eagles and the
Don't even want to
Phillies
talk
and
about
the
the
Sixers.
Eagles.
I know, no talk about the Eagles. Big Phillies fan, so I do watch a lot of sports and a lot of college basketball and football.
There you go.
I'll watch different series with my husband. I mean, we sit down and we're Star Trek, family. We're Star Wars family, Harry Potter. So, just a
Love it.
plethora of those kinds of themes. Yeah, yeah.
Love
But
it.
I do
Love it.
read. I do read.
Okay. So is there a book that you've read in your life that has been really impactful? It could be a business book, it could be a personal book, it could
Yeah.
be anything that is like either you go back to it or you're like, yeah, that was like something that really like left its mark on me.
Yeah, definitely. So I have read The Four Agreements by Don Miguel Ruiz.
Great
And
book.
I love, I look at the four agreements, be impeccable with your word, don't take anything personally, don't make assumptions, and always do your best. And I have to say, I just turned 50 in November. The last decade has really been a journey for me. And I think those four agreements have really come more into play now that, I'm 50 and I've spent half a year, half my life on this earth, and just trying, especially in my business, I've had to learn, I don't apologize for why I price things the way I do, why I do the work the way, and I'm honest with my clients. I talk with my clients, not above my clients. So I'm really, I kind of look at those four agreements and go, yeah, I've really been able, to do that. I've owned my business now for 10 years and I'm always trying to do my best. I don't always get it right, but I always try.
I
So
love that.
yeah,
I love it.
yeah,
I love everything about that. And
yeah,
then
definitely.
our last two questions that we ask
Yes,
every guest, because our show at its core is a show about organizing different parts of
yes.
your life, whether that's the physical stuff, whether that's calendar, whatever that looks like, digital. Um, in this season of your life, and listen, we know you're
It's tax season.
you're an empty nester, but you're a
Yes,
business owner in the throes of tax season.
yes.
Where do you feel the most organized and where do you feel like a little bit of a hot mess?
So right now, I feel the most organized with the tax season work. I have to have checklists. I have to have reminders. I have my client portal with all kinds of different tasks because I have a lot to organize between my clients and when things are due. I'm working in a crunch time. So that aspect of it, although my office becomes very messy and disorganized, just papers and stuff everywhere. And my home life gets messy because to sit there and have to do the dishes or do the laundry or, put the laundry away or just, and I'm blessed because my husband is wonderful because he will pick up a lot of the slack. I work, anywhere from 45 to 60 some hours. I work 7 days a week during tax season. I
Wow.
don't not work. So yeah, I feel very organized in the work life, but the house gets, it just, and I tell my friends, I love you. I might not respond right away until April 15th. So just know I do. January 1st on my Facebook page, my personal page, I put, I'll see you April 15th because
Yeah, right.
they know. Yeah. I do get out. I do self-care, but yeah,
No, it's
yeah.
it is a literal season of your
Yes.
life. And I love that you share that because it gives people like there are going to be points where things are going to fall by the wayside, whether
Hmm.
that means, or we're going to put a pin in that, whether that
Yep.
means the relationship side or the house is going to take a back seat for now. And whether that means somebody else is going to pick up the slack, which is the ideal situation that somebody else is going to pick up the slack
Right.
for you, or you just give yourself permission to be like, this is going to be
Hmm.
temporary. I call it situational clutter. We know that
Yes.
this is the season right now. This is what's happening. And then when we get back on track into things of
Yeah.
air quote normalcy, things will rebalance.
Yeah, and it'll be interesting because with both of my kids now out of the house, this tax season will be the first one in forever really where wow, I don't have to like be on call if my son can't drive himself home because he has a migraine or something happened with the car or shuttling to make sure that there are things with both kids. So it'll be interesting. I hope train myself not to work all the time and still take those
Sure.
breaks, but yeah, it's definitely a little different of a shift,
Yeah.
for me this tax
Abs-
season. Yeah.
Absolutely. Well, Samantha, I appreciate you carving time out of
Thank
your
you.
very, very, very busy schedule to have this
Yes.
conversation with us. It's so, so important and critical.
Oh,
I
I've
love it.
enjoyed myself. Thank you.
And you've given some really great, specific, actionable tips, which is what I love, what our listeners love. And so thank
Great.
you so much for that.
You're welcome.
And again, if this is your first time tuning in, welcome. If it's not your first time tuning in, thanks for coming back. Please do your friends a favor, share this episode, share it wherever your friends are, LinkedIn, Instagram, Facebook, wherever. And leave us a review or let us know your thoughts on this show. We do read them. If you have comments, questions, let us know. And we're so happy that you are here. So
Thank
again, we'll
you.
be back next week with another episode. Until then, I'm Lori Plow. Peace out. Thanks for tuning in. If you like this episode, please spread the love and share it with your friends. And if this is your first time joining us, make sure to click the subscribe button wherever you are listening so you never miss an episode. And while you're there, please leave us a review so other people know that our show is worth the listen. You can also find us on YouTube and Instagram at This Organized Life Podcast. And if you'd like to connect with us, you can head on over to our website at simply the letter B like boy organized.com, which is filled with tons of resources, including free downloads, checklists, links to our amazing organizing partners, and all of our digital offerings. I'll see you next week for another episode of This Organized Life.